What is up guys, Taiki here. Today I'll be going over the farms that I'll be looking out for in the month of July on the Polygon and Matic ecosystem. If you like the content, please like and subscribe and leave a comment in the comment section below. So let's get started. Alright, so this has been my setup on AAVE for the past week or so, where I have assets as collateral and borrowing against it. And with the DAI in USDC I'm borrowing as collateral, I've been farming on DFYN or DFYN, right? Whatever it's called. People have been saying it's called DFYN. Like, I don't really care at the end of the day. I'm just sitting comfy with my stablecoins earning 50% APR. This does have a vesting schedule, so you can't just like farm and dump these tokens immediately. But I feel okay with that just because, you know, I just want to farm to accumulate this token and because I do think it has potential to appreciate in the future. But, you know, I'll probably rotate out of this just because I see better opportunities coming in the near future, which I'll go over later in the video. But, you know, this mindset of farming to accumulate was something I did with QiDao, right? When I was farming this token, roughly at 30 cents, I sold it up here. I played that pretty well, but it's piqued my interest again, right? QiDao being my finance. It's a Maker DAO fork where you can deposit Matic as collateral and take out stablecoins against it. Take out a loan, right? And they're going to expand the types of collateral that you can mint stablecoins out of. So like Matic deposit on AAVE, Bitcoin, Link, and etc. So on the stablecoin, well, not this tab, on the stablecoin pool, my USDC, you can earn roughly 30% and almost 420% for my Chi. And you know, it piqued my interest again just because I see them constantly ship new products out, and as well as partnerships. One of those partnerships being one with Balancer. Obviously, like Chi has like partnerships like random farms and whatnot. Like, I'm not gonna get out of bed for like random partnerships with like whatever farms that's gonna die in the next 5 days anyways, right? But partnerships with apps like Balancer, like that's gonna raise a couple eyebrows for me, just because Balancer has been around for a while, and though they're not like the top blue chip, right? Blue chip per se, but you know, they're led by a great team and they have an innovative product. And Chi, its token is gonna be part of their liquidity mining program, right? So Balancer is going to have their own liquidity mining rewards. So Balancer is an AMM, it's a decentralized exchange, and this is their application. But like, their key difference is that it allows for, I guess, providing liquidity for more than 2 assets, right? For Sushi or QuickSwap, you provide liquidity for 2 assets, but on Balancer you can provide liquidity for many assets. So this is very, very confusing for anyone that's seeing this for the first time. But let's just focus on the most simple one, and like everything works the same at the end of the day. So for example, like this Matic USDC ETH balancer pool, like 4 assets, like how does, like what the hell is going on? Like how does impermanent loss work with this? Well, there's a cool app called baller.netlify.app. The website is this, right? Where it's specifically made to calculate impermanent loss for balancer pools. So let's do a couple simulations to see how much impermanent loss you would incur if price of like certain assets just go up a lot, right? So what if Matic just goes up berserk and like triples in value, right? Goes up 200%. Well, then there's going to be 12.26% impermanent loss. And even if there's like many assets, right, in these balancer pools, the concept of impermanent loss still holds true, where if something goes up a lot, then the pool will rebalance by selling that thing that went up a lot and like redistributing it to the other assets. But what if like something goes wrong and Balancer goes down 50%? Well, then it's 3.9% impermanent loss. And I've seen some comments where people are like, oh, I only lose 4% if Balancer goes down 50%. That's a steal, but those people are kind of misunderstanding the point. So here's a simulation, or here's an example of like what actually does happen if Balancer were to dip 50%, right? And this is the website, obviously. So let's say you provide liquidity for that pool, $100 each, right? As you see here, and Balancer goes down 50%, right? It goes down to $50. Well, if you were to simply hold these assets and not provide liquidity, you would end up with $350. And the impermanent loss is something you apply to this number, right? Not to the $400. So if you provide liquidity, then you would end up with this much, right? Because this is how much you would underperform compared to just hodling, right? That's the definition of impermanent loss. Obviously, maybe these liquidity mining rewards, right, these high APYs will make up for it. I do suspect these to go down in the near future just because $8 million isn't that much liquidity. Maybe because people don't really know about it yet. But, you know, balanced liquidity mining programs, something to look out for. And there's like this thing too with like 8 assets. Very complicated. All right. So something else that's coming out is Pickle, right? Pickle Finance. And the goal of this video is for you to kind of have a broad understanding of what's coming out in the next couple of days or a week, so you can make your own decision to where you want to deploy your capital to farm. So Pickle it's similar to Adamant Finance, like Beefy, it's like a yield. I guess it's an auto compounder, right? You provide liquidity and it'll auto compound for you, and it'll also reward you with Pickle tokens. And I'm not going to get out of bed for this one. I don't think it's that exciting just because there's only like 56K of rewards per week for 8 weeks, a little over $400,000. Maybe like me neglecting it is like alpha for you guys, just because maybe everyone ends up neglecting it and you can capture all the APY yourself. But the UI is kind of confusing right now. I hope they fix it. It's not launched yet, at least on Polygon, but it's something to look out for. Obviously, Curve is also one. The yields have gone down. I mean, roughly 7% on dollars is still really good, but this used to be like 15%, right? Obviously, the Bitcoin pool is like really low, but on the 1st of July, there's going to be rewards are expected to launch on the 1st of July after governance votes, so look out for that too. I have a video on HY Crypto. It's really similar to Balancer Pool, where it's Bitcoin, ETH, and USDC, Bitcoin, ETH, and dollars, right? It's just 3 different assets, 33% for each. Check out that video if you're interested in how impermanent loss works for this one. Then the next one, I think this is the one that I'm currently most excited for, is Kyber. So a lot of people have just looked at the headline, right? This is launching tomorrow, I believe. Yeah, 30th of June. $30 million in rewards. But it's not actually $30 million for Polygon. It's $25 million for Ethereum and $5 million, right? $5 million for Polygon. And Polygon is matching it with $500,000. So it's obviously less, but it's still pretty good. Like $5.5 million spread across 2 months. That's still gonna give people pretty high APRs, right? And obviously comparing $5.5 million over 2 months to Pickle, like roughly $400,000 over 2 months. Obviously, Kyber is more, more attractive. So I know people have been having trouble with like depositing assets just because it's kind of complicated, right? It's similar to Uniswap V3, I believe, where it's like concentrated liquidity and it's supposed to increase or improve like the swap slippage and whatnot. I'm not too sure about it, but I'm probably going to be in the USDC DAI or USDT USDC pool, so I don't really have to, understand that yet. I mean, I'll obviously do my research after the video once it comes out, but something to look out for as well. I also know Polygon and 0x. They announced this a few weeks ago, but I haven't really heard anything about it. Also, I think they deleted one of their Medium articles announcing this partnership, so maybe something went wrong with their partnership and they're not doing it anymore. But this is something I'm still looking out for, right? The last thing I'll go over is Cream. So Cream is a AAVE / compound fork, right? It's a money market, borrowing and lending, and it's also going to come on Polygon with liquidity mining programs. The details are yet to be announced, so we don't know when and how much money they're going to get. But the cool thing about Cream is that they're going to allow for the collateral of Link, Sushi, Curve, and Quick. If you've been following my channel, I've talked about how bullish I am on Sushi, but I didn't want to buy Sushi just because there wasn't really much I could do with it. But if I can buy Sushi, the Sushi token, use it as collateral and borrow stablecoins against it on Cream, then maybe that gives me an incentive to buy Sushi tokens, right? Because it'll allow me to like unlock, the equity of the Sushi token and whatnot. So obviously, so all the farms that I kind of went over, they have like partnerships with Polygon, and whenever Polygon matches or like allocates tokens for these apps, I consider them to be safe, right? On the safer side. And obviously along this spectrum of safe, I mean, there are spectrums, right? Because Cream is definitely higher risk than AAVE, right? And a lot of people get upset when I say Cream is higher risk, but I mean, don't listen to me, listen to the markets. Cream on Ethereum have roughly a little over $200 million locked, right? Or they have different numbers here and there, but they're roughly $200 million. Whereas on AAVE, it's $17.4 billion, right? And there's 4.4 on Polygon, so roughly $13 billion on Ethereum. So compare 13 billion with a B to 200 million with an M, right? Obviously the market thinks AAVE is safer and cream is higher risk. Obviously, one of the reasons is, cream has been exploited in the past, and it doesn't really matter if they fixed the issue, right? And people will remember this headline, right? They've been exploited for $37.5 million. So I think this is something that's always in my head. Like, yeah, cream got exploited in the past, so I'm not going to allocate all my capital into cream. I might do some depending on the rewards, but I'm not going to feel comfortable putting all my eggs in cream finance. But I feel comfortable putting all my eggs in AAVE just because I think it's safer. So what am I doing? So what will I be doing in July? Well, first I have to wait until these actually launch, and then I can make a more informed decision. But me personally, I'm going to be targeting the safer ones, right? So like one of the ones I've overlaid here, right? I know there's a lot of different farms that's more degen, more higher risk with higher APYs, but for me, I'll be going for the safer ones. Reason for that being, next week I'm going to be going on vacation, right? Pending my COVID test, but I'll be going to vacation in Hawaii. And I kind of want to touch on the lifestyle benefits of farming, because being a yield farmer, you can kind of adapt your farming strategy based off of your life situation, right? Or events coming up. Because me personally, I don't intend on managing my farm and trading in and out of positions when I'm in Hawaii, right? Partly because my girlfriend's probably going to break my dick if I do that. So I guess this brings on a more broad conversation of how farming compares to trading. Because if you're a trader, you kind of have to manage your position depending on how much risk you're taking. But if you're farming, depending on the degen level of those farms, you can kind of sit comfy and not really worry about that. And that's kind of the beauty of yield farming, right? And just being a humble farmer. All you have to do is, maybe once a day, tend to your cattle, tend to your crops, water them a little bit, give them some fertilizer, right? Flick that fertilizer, and maybe drive the tractor around the farm, maybe 2 times a day. And you're just gonna watch your crops grow. You're gonna collect. You're gonna harvest those crops, and you're gonna sell it in the more open market. And then with those gains, you can improve your life and whatnot, right? So I guess if you're working a 9 to 5, then you're naturally gonna go towards the safer farms that I've highlighted in this video. But if you're chilling at home all day, then you have the liberty to explore out into the risk spectrum, to explore these 3 to 4 digit APY farms. And I talked about this on my last live stream, but this tweet by Crypto Yield Info, I really agree with, where almost all leverage traders lose money. A few exceptional make money, right? And we all strive to be, and I guess all striving traders want to be like that crazy rich guy that makes a lot of money through trading Bitcoin, but statistically it's very unlikely. But almost all yield farmers make money. A few exceptional lose money, right? Because if you're farming with stablecoins, then how do you lose money, right? You might underperform the market if Bitcoin's going up and to the right, but you can't really lose money, right? So that's why I always, in the future, I'm never going to be 100% exposed into volatile assets. I'm always going to have a stablecoin bag that I'll be using to farm, because unless you consistently get rugged every farm you enter, if you average out your risk across dozens of farms, I'm pretty sure that it's really, really hard to lose money farming. So hopefully this video gave you a better insight of what to look out for in the future, right? In the next couple of days, 2 weeks, and I guess my mindset of being a farmer, I'm going on vacation, so I don't want to have to deal with volatility and getting the possibility of being rugged. So I'll be a boomer. I'll farm some corn, right? Not some exotic Brussels sprouts or something. I'm gonna be probably entering Kyber, maybe Balancer, maybe stick with DFYN. Who knows? Or DFYN. Who knows? But hopefully, obviously, before I go on vacation, I'll be transparent with what I'm doing. But yeah, thank you guys for watching. Have a good one and have fun farming. Thanks for watching till the end of the video. I just wanted to mention that I'm participating in round 10 of Gitcoin grants, where even the smallest contribution matters due to quadratic funding. You can see that even a $1 contribution will be matched $3 by Gitcoin. So, if you like the channel and it's helped you understand DeFi, yield farming, etc., and you want to support me in the channel, I would really appreciate even like the smallest donation, because how quadratic funding works is that the more people donate, the matching just increases, right? So thank you for your consideration, and the links will be in the description below.